Welcome back, traders. Glad you're here today. In this short video, I will show you how to build a powerful and reliable trading strategy with the Support and Resistance AI, K means median, Think Logic AI indicator to detect high winning trade probability setups in the market. K-means is a clustering algorithm commonly used in machine learning to group data points into distinct clusters based on their similarities. While K-means is not typically used directly for identifying support and resistance levels in financial markets, it can serve as a tool in a broader analysis approach. Support and resistance levels are price levels in financial markets where the price tends to react or reverse. Support is a level where the price tends to stop falling and might start to rise, while resistance is a level where the price tends to stop rising and might start to fall. Traders and analysts often look for these levels as they can provide insights into potential price movements and trading opportunities. To apply this indicator on the trading chart, search the keyword Support and Resistance AI, K means median, Think Logic AI indicator on the TradingView indicator community scripts folder. As we can see, here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight this indicator and its purpose so you can quickly understand how it works. To do this, we need to right-click on the indicator and navigate to the Settings option. Here are the parameter settings of this indicator. Under the Input Settings section of the indicator, there is the number of clusters. By default, it is set to 3. The user can select from 3 to 5 clusters. A good rule of thumb is that if you're trading intraday, less is more. Think 3 rather than 5. For daily 4 to 5 clusters is good. Cluster method. To get around the outlier limitation of K-means clustering, the median was added. This gives the user the ability to choose either K-means or K-median clustering. K-means is the preferred method if the user thinks there are no large outliers, and if there appear to be large outliers or it is assumed there are, then K-medians are preferred. Bars back to train on. This will be the amount of bars to include in the clustering. This number is important so that the user includes bars that are recent but not so far back that they are out of the scope of where the price can be. Show SD bands. Select this to show the 1 standard deviation bands around the support and resistance level, or unselect this to show the support and resistance level by itself. Features. Besides the support and resistance levels and standard deviation bands, this indicator gives a table in the upper right-hand corner to show the density of each cluster, support and resistance level, and is color-coded to the cluster line on the chart. Higher density clusters mean price has been there previously more than lower density clusters and could mean a higher likelihood of a reversal when the price reaches these areas. How does the Support and Resistance AI, K means median, Think Logic AI indicator function in the market? This indicator can be used in 2 ways. 1, to trade in the direction of the market. If a trader thinks the price will go higher or lower and the price is within a cluster zone, the trader can take a position and place a stop on the 1 SD band around the cluster. The SD bands are the white lines. Calculating risk to reward. Targeting a risk-reward ratio of 2 to 1, the trader could clearly make that given that the next resistance area above that in the orange cluster exceeds this risk-reward ratio. 2, to trade the reversal of market trends. We can use cluster centers, support and resistance levels, to go in the opposite direction that the price is currently moving in hopes of price forming a pivot and reversing off this level. Similar to the directional trade, we can use the standard deviation of the cluster to place a stop just in case we are wrong. How can traders use the Support and Resistance AI, K means median, Think Logic AI indicator for the continuation of an uptrend? Step 1. Watch out to see a bullish trend in the market. Step 2. Watch out to see a bearish price swing to one end of the red, green, or blue horizontal lines on the price chart. Step 3. Watch out for a strong bullish bound up above the horizontal lines. Step 4. Ensure there is a minimum of at least 2 risk-to-reward ratio targets to the next resistance line in the uptrend. Step 5. Place a stop loss at the next SD line below the price bounce up zone. How can traders use the support and resistance AI, K means median, think logic AI indicator for the continuation of a downtrend? Step 1. Watch out to see a bearish trend in the market. Step 2. Watch out to see a bullish price swing to one end of the red, green, or blue horizontal lines on the price chart. Step 3. Watch out for a strong bearish bounce down below the horizontal lines. Step 4. Ensure there is a minimum of at least 2 risk-to-reward ratio targets to the next support line in the downtrend. Step 5. Place a stop loss at the next SD line above the price bounce-up zone. For the reversal of an uptrend, Step 1. Watch out to see a bearish close of price below a support line in an uptrend market. Step 2. Watch out to see a bullish retest of the broken support line in the uptrend. Step 3. Watch out for a strong bearish rejection from the line acting as new resistance for the price. Step 4. Ensure there is a minimum of at least 2 risk-to-reward ratio targets to the next support line for the reversal entry. Step 5. Place a stop loss at the next SD line above the bearish price rejection zone. For the reversal of a downtrend, watch out to see a bullish close of price above a resistance line in the downtrend market. Watch out to see a bearish retest of the broken resistance line in the downtrend. Watch out for a strong bullish rejection from the line acting as new support for the price. Ensure there is a minimum of at least 2 risk-to-reward ratio targets to the next resistance line for the reversal entry. Place a stop loss at the next SD line below the bullish price rejection zone.